You guys know I love dividends and I love cash flow, and I really like safe, high yield dividend stocks. So you can just imagine my surprise and my curiosity when I saw Credit Suisse's website and their 4 different exchange traded notes yielding over 9, 10, 12, 15%. The big question here is, what are these types of exchange traded notes, and are they a fit for our portfolio? Are they safe? What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video we are doing a deep dive, a comprehensive review on Credit Suisse's 4 different exchange traded notes, which have significantly high dividend yields. Specifically in this video, I'm going to break down for you exactly what is an exchange traded note, and is it the same thing as an exchange traded fund like an ETF? Is it just like a dividend stock? What exactly are these things? I'll also break down for you what the different characteristics are for each of these different 4 different exchange traded notes. We'll look at their dividend yield, we'll look at their underlying characteristics, what indexes they are tracking, and then I will put each one of these 4 different exchange traded notes to the test and see how they actually perform against a fund that I know that you guys all know about, QYLD. The goal of this is to see, are these funds safe? Do they deserve a spot in our portfolio, or are we just chasing yield at this point? You guys know I value your time and I never want to waste it, so without further delay, let's get started. A change of scenery is exactly what happens when you want to try and film during the middle of the day and the kids have video games and other activities and we're just trying to switch rooms around. Putting that all aside, let's go ahead and jump right into the video. All right, so we're here on the Credit Suisse X-Links Exchange Traded Notes website here, and you'll notice that they have 4 different exchange traded notes that we're going to look at here. They are the X-Links Gold Shares Covered Call ETN, GLDI, the X-Links Monthly Pay 2X Leveraged Mortgage REIT ETN, REML, the Silver Shares Covered Call ETN, SLVO, which is one that has been very popular in the comments and people asking my opinions. And then we've also got the X-Links Crude Oil Shares Covered Call ETN, USOI. I mean, you can see it right here on the screen. Look at these yields: 972, 1706, 1373, and USOI at 17.27. Those are crazy high yields. Anytime we see a yield north of 8 or 9% and it's not like a closed-end fund or a real estate investment trust or something unique, our first thought needs to be, are we in a yield trap here looking at this investment? Are we just chasing yield at this point? Are we killing the proverbial goose that lays the golden eggs, getting rid of our base capital to get these significantly high dividend yields? We're gonna have to find that out. Before we can even dive into these different exchange traded notes, we need to fundamentally understand what on earth is an exchange traded note, because it sounds like an exchange traded fund, but it is completely different. So we're first here on investopedia.com for exchange traded notes, and it says here, exchange traded notes are types of unsecured debt securities that track an underlying index of securities and trade on a major exchange like a stock. ETNs are similar to bonds, but do not have interest payments. Instead, the prices of ETNs fluctuate like stocks. Okay, let's stop right there. It's an exchange traded note, which means it trades on an exchange, okay? So you can look up these ticker symbols and you can find them probably in Robinhood. I've not tried that, but you can definitely find it on Fidelity and other brokerages. They trade like a stock, but it is not a stock, and it's not a fund that tracks specific stocks like you would have with an exchange traded fund like SCHD or even QYLD, right, that hold underlying actual physical companies. With an exchange traded note, it's completely different. It's actually unsecured debt. Kind of like a bond, but unsecured. Here's another article on the Schwab website here. This one does a great job of explaining the differences between an ETN and an exchange traded fund. So as we know with an exchange traded fund, it's a basket of securities such as stocks, bonds, or commodities. You actually hold the underlying physical assets. It trades on an exchange like a stock. And it also says right here, an important characteristic of ETFs and mutual funds is that they are legally separate from the company that manages them. So you might have an investment company that has a specific ETF. Think of like the ARK ETFs, right? Those investments are managed by ARK, but the actual investments, the actual fund and the company are separate entities. They can't, rob from that fund to pay themselves. It's a separate entity. That's different with an exchange traded note. As it mentions right here, exchange traded notes are different. Instead of being an independent pool of securities, an exchange traded note is a bond issued by a large bank or other financial institution. The company promises to pay exchange-traded note holders the return on an index over a certain period of time, and then return the principal of the investment at maturity. Now, just because it says you have, until maturity doesn't mean you have to wait until maturity. You can openly buy and sell this fund on the exchange, but technically there is an end date for these funds, and I believe it's 2033. It says right here though, however, if something happens to that company, such as bankruptcy, and it's unable to make good on its promise to pay, exchange-traded note holders could be left with a worthless investment or an investment that is worth much less, just like anyone who had lent the company money. So when we look at these four funds here, you're not owning any underlying assets. You are owning a bond or a promise to pay. Now, this investment it tracks an exchange. So in this case, you can see your gold tracks gold. And this one here tracks the mortgage REIT index, and it's leveraged with by 2x, so it doubles the actual returns of the mortgage REIT. Then we've also got silver, which tries to track silver, and then crude oil, which tracks crude oil. We'll dive into that in a second. But it's not holding the underlying asset, it's just tracking an exchange, and they're gonna make monthly payments to the underlying bond or ETN holders. Now, that doesn't mean that they are obligated to make those payments like you would have with a bond. They have been making those payments, but they're not obligated to do so. So after hearing all this information, why on earth would you own an exchange-traded note? I can already see you asking that question out loud. So let's go ahead and dive into that. And it says right here, additionally, ETNs may have some attractive tax consequences. While this could change in the future, investors are usually responsible for paying taxes on their investment only when they sell it for a gain. So even though you're getting distributions of dividends and interest income the way a stock or bond fund may pay, all of those taxes are deferred and taxed as capital gains. Sounds a lot like return of capital. One thing to note here is that the IRS has already ruled against this tax treatment for currency ETN. So they could apply that same ruling to other types of exchange traded notes as well. Now here's some additional risks that they call out here. So credit risk. So when we own an exchange traded note from Credit Suisse, for example, we are relying on Credit Suisse to be able to have the money available to pay us back. If for some reason they go under, our investment is not protected. Perfect example of this right here. At the time of the bankruptcy in September of 08, Lehman Brothers had 3 exchange-traded notes outstanding, and many investors sold prior to the collapse, and a lot of them got just pennies on the dollar. We also have liquidity risk here, the idea that it's not as heavily traded as other types of investments, so there might be a significant spread between the bid and the ask when you are buying this investment. So we can see here that there are some risks that we are taking on by owning an exchange-traded note that we wouldn't necessarily have if we own an exchange-traded fund. So the question becomes, is it really worth it? Well, that's where that dividend yield comes in. Is it worth it? Let's deep dive into these ETNs. Okay, so we've got 4 here. We've got GLDI, REML, SLVO, and USOI. So if we just take a look at the gold shares covered call ETN first, current price per share, the indicative value is $8.65. As it says right here, this covered call ETN is a senior unsecured debt security issued by Credit Suisse. They pay a monthly variable cash coupon, not a dividend, it's a dividend, but we're calling it a coupon because it's more like a bond, based on the option premiums covered from selling call options. So they're trying to track a specific index, which is GLD. You can see that right down here. The index seeks to implement a covered call investment strategy by maintaining a notional, that's a weird word, long position in shares of the SPDR Gold Shares ETF, GLD. They're trying to track that index and trying to generate current income by selling call options. We'll see how successful they've been at tracking that index. The annual investor fee is 0.65%, and it was created in January of 2013 with a maturity date in 2033. Again, you can buy and sell these though whenever you want to. Here's the performance. 1 month, 3 month, year to date, 1 year, and 3 year. You can see those are some nasty numbers. Look at that inception number. It's down 56.73%. Stop right there. Say that again. 56.73%. That's a lot. Let's deep dive that as well. We can see here current yield annualized is 9.72%. We've got coupon history that shows that historically, in 2021, then we got 2020 at $1.36 in coupons, 65 cents total in 2019, 45 cents, 70, 154, 103, 147. It bounces quite a bit around. And there's a graph of it there, coupon history. It's all over the place. It's not stable. We have some data we're gonna look at in the spreadsheet, which again is available in the Patreon community. For everybody who's not a member of the Patreon community, you gotta join. There's so many benefits here if you are a dividend cash flow investor looking to improve your education and get an idea of what I do in my own portfolio. Members of the Patreon community, this spreadsheet is available right now. Just go ahead and log into Patreon. It's there for you. This is interesting. So this is GLDI. This is their price history since 2013. You can see it started at, what was that? I don't know. $17 a share, and now it's worth, what down here, $8.61. Now, here's what GLD did, SPDR Gold shares. It started at, what around 100 and, we'll call it 147, 145, 136, excuse me, and it ended at, it's higher, 136 versus 167. I would not call that tracking the index. GLDI has gone down and GLD has gone up. That seems like the opposite of tracking an index. Part of that has to do with the fact that it's paying out a lot of premium, which is taking away from the returns. Here's that price history right here between the two, which is what brings up the graph. Next up, we have REML, the monthly pay 2x leveraged mortgage REIT exchange traded note. And the yield on that one currently, holy smokes, 17.06%. Let's deep dive that one. Current price here, $6.85 per share. Lots of capital, lots of people invested here, $214 million. Current yield, like I said, 17.06%. This specific ETN is a senior unsecured debt, and it's trying to track an index here. It's tracking here, it measures the performance of tax-qualified U.S. mortgage REITs with more than 50% of total assets invested in mortgage loans or mortgage-backed securities secured by interest in real property. This fund was created in July of 2016, and it's got, interesting here, it's quite a complex expense ratio. We've got a tracking rate, 0.50% annually, but it also, there's a financing rate that goes along with it. It's the LIBOR, which right now I believe is 0.12%. I looked that up. And then 0.8% annually. So it's 0.8 plus 0.12 plus 0.50. Ends up being a lot more than what you think. Now, you can see it right here. REML, 1.42% on the expense ratio. That is significant. Performance here, a lot of big numbers that are not good, right? 3-year return is negative 74%. Since inception, down 72%. Shut the front door. This is not trending well for me. There's that coupon history, right? Current yield is 17.06%. You can see it bounces around on those coupons. We scroll down to that chart here. It's all over the place. It's up, then down, then up, then way down, then up, then down again, then up, and then I guess you could call it semi-stable now. And here are some of the underlying investments in the index, right? So AG, it's not owning these specific investments. It's just tracking the index and it's telling you what the index is comprised of, right? So here's the full list. You can see top 10 though. We got 16% in this one specific mortgage REIT. Then you got AGNC, Starwood Property, New Residential Investment Corp, New Res, Hannon Armstrong, Chimera Investment, Blackstone Mortgage Trust, Arbor Realty. That I like that one. We've talked about that one. Then we've got Apollo, Two Harbors Investment. So it's got underlying investments it's tracking, but it's not holding them actually. So check this out. Here's the graph here. I didn't have the index mapped here, but take a look at this chart here. It's kind of, it's not doing well here. It's at what? 32, 33, bounces around here. It's kind of going down though, downward trending down to 25 and then just drops. I've never seen more representation of a cliff here. It literally falls off a cliff here right around COVID, and it makes sense because, mortgage REITs, there was a lot of concern around the housing market and mortgage REITs and whether they were going to stay liquid. So that's massive. 27 down to what, like 2? That's insane. And the crazy part though is it's only barely recovered, right? Most investments have almost completely recovered or have far outpaced their pre-COVID highs, but this one here is still a fraction of where it's supposed to be. All right, next up, let's talk about the Silver Shares Covered Call ETN. Current yield 13.73%. All right, so this one here, current price per share is $5.46. Again, senior unsecured debt, tracking an index. It says right here, seeks to implement a covered call investment strategy by maintaining a notional long position in shares of the iShares Silver Trust ETF. So it's trying to track Silver Trust, SLV, while also selling call options on that position on a monthly basis that are approximately 6% out of the money. You can see here we've got an annual investor fee of 0.65%, fund created in April of 2013. There's again some massively negative performance numbers here. Since inception, down 72%. These are massive warning flags. And here's that coupon history. 2021 is at $1.13, $1.66 last year, 51 cents the year before, then 42, 71, 148, 142. So all over the place, as you can see right here on this coupon history, right? This is just for this current year right here. It's again dropped way down below it was in 2020. All right, guys, look at this chart here. So we've got since inception these two investments at different prices, but this is right here. This is actual silver shares. This is SLV. You can see here it started right around, I'll call it what is that number right there? $22 a share, give or take. And at the end of the period, over those 7 years, now we're at, oh, it's higher. It's about the same. So we can see here, it popped way up and it came back up here. But what happened to SLVO? Look at this price here. Went from here at 19 and now it's worth like 6. This is a massive warning sign. Now this doesn't include our reinvested dividends, and we'll see how that actually changes the results, but it's still very alarming. All right, lastly here we've got USOI, the X-Links Crude Oil Shares Covered Call Exchange Traded Note. So current price here, $5.23. And then we've got current yield 17.27%. This index, it's tracking an index that seeks to implement a covered call investment strategy by maintaining a notional long position in shares of the United States Oil Fund. This is the index, not the actual ETN. So it tracks the underlying investment, which is USO, the United States Oil Fund Limited Partnership, while also selling call options on that position on a monthly basis that are approximately 6% out of the money. All right, created in 2017 in April, it's got an annual investor fee of 0.85%, so that's pretty high. Again here, we've got some massively negative numbers here. The 1 and 3 month returns are fine. Year to date's even pretty good. 1 year return, even better, 25%, but 3 year down 81%. And since inception 2017, down 79%. Here's that coupon history or dividend history. 2021 is at 79 cents. We've got $3.17 in 2020, $3.68 in 2019. The massive numbers in the past, and 2021 is way down low. We'll have to see how that looks here. I mean, you can see some significant adjustments here. Up high, then down low, and then up high, and then down low, and then staying low. Here's a chart of USOI. This is very interesting. So we've got USOI, which is the actual exchange traded note price, and then we've also got USO, the actual underlying index that it's trying to track here. So both of them actually doing about the same here. They're tracking the index very well. And it's selling covered calls, so it's working out even better. And then there's a tumble right here, right around COVID, right? When oil prices were just insane. We expected this drop. It happened in USO and USOI. But then you can see USO has actually recovered a bit. Here it's at like what? $17 a share, and since then, over a year and a half later, it's up again to 47. So from 17 to 47. Here, we drop down to 5, and what are we at? Well, we're at 5. That's not much of a change at all. So the biggest thing here we've noticed is that with all 4 of these exchange traded notes, there are significant problems tracking the index for the most part, and we have significant drops from inception until now. So that's as far as we're gonna go in this video. In the next video, which is gonna come out tomorrow at the exact same time, 1 o'clock Pacific Standard Time, we're gonna back test each one of these 4 different exchange traded notes. We're gonna see how they've performed over 2 different time periods. We're gonna compare them on 4 different investment strategies using lump sum investments, monthly contributions, reinvesting, all dividends, and we're gonna see which one comes out the best, and also we're gonna see how they compare to what many people consider to be a very radical investment, QYLD. So stick around for that. If you're not a member of the community, if you haven't subscribed yet, hit that subscribe button so you are alerted when this video drops tomorrow. Until then, guys, have a good one.